Hello and welcome. My name is James Kelly. I'm the Head of Aviation Finance at KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to welcome Ali Ben Lmadani, founder and CEO of ABL Aviation. Ali, thank you and welcome. Thank you for joining us. We're here in October 2025 in New York. Maybe before we start, I'd love you to give us a little bit of background on ABL Aviation, well known to many of our viewers, but maybe useful to nonetheless get a bit of oversight.
Well, ABL Aviation is an asset manager. We are right now at about 120 aircraft, 7.2 billion AUM. We started, funny enough, we're in New York. We started ABL Aviation a few blocks up from here on Park Avenue. And it used to be at the beginning, like 20 years ago, ground support equipment. So my first business used to be ground support equipment. I did that since I was 22 of age until 32. And in 2014, we moved to aircraft leasing. And that's when we moved to Midlife market in 2014 as an asset manager. Then in 2017, we did a large joint venture in Japan, which used to be at that time a 5-year exclusive joint venture that now became a 25-year exclusive joint venture, where we do new assets. So we did Midlife, then we moved to the new assets. On the new assets, we are right now in 2025 deploying about 2.5 billion. So we started with about 500 million of new assets, and right now, last year was about 2 billion, this year is 2.5 billion. By end of 2025, and the idea is to grow that market every year. We are back into midlife, so we are raising a fund right now to get back into midlife, which is like 5 to 15-year-old aircraft. So we're getting back into that market because we believe that with the lack of supply from Boeing and Airbus, we have a very good competitive advantage with our technical team to be in the midlife market. So we are back into the midlife as well. But of course, we'll keep on doing the new assets, which we did, as I said, this year, about 2.5 billion, and we hope to increase that number every year until 2030.
So maybe to start with the macro picture, right, for a moment. You guys are 2.5 billion of assets. You obviously get a good oversight of the demand environment. Be interested in your perspective on the demand environment across the various regions. So ASPAC, the Americas, EMA, and even then across aircraft types.
I will define it differently. I will define the demand, if you don't mind,
Sure.
by age. So you have the 0 to 5 years, the new assets, the midlife and the end of life. With the three OEMs, of course, Airbus, Boeing, Embraer, having delay of production, and all Embraer is a little bit faster, we see that there's huge demand of aircraft capacity. And because of that, the midlife market, which is, I think, surprising, there's more and more demand, there's more and more extension. So the demand is very present on the midlife market. It's present on the new side, but as you know, on the new side, there's a limited supply from the manufacturers, and of course, of the supply chain issue. So there's extension, there's more and more needs of midlife markets, and I think that's something that we should watch for the next 5 years. But of course, on the new side, we still have a big demand. There's a lot of RFPs, as we saw in the markets from airlines in the last few months. There's a very huge RFP that we didn't see before of financing for new assets.
Okay. And if we think of the global economic environment, there has been some tremors, right? So global trade tensions, geopolitical tensions. Thankfully, tariffs maybe got resolved. Have you seen any of that maybe have an indirect impact in aviation, either on consumer demand or maybe a little bit of softness in the aircraft industry?
The tariffs, I think there was some kind of arbitrage done by like some OEMs moving where some of the parts are being done by Asian. And we saw it, for example, I'm from Morocco, we saw it in Morocco where some of the OEMs based more of the manufacturing there because of the free trade agreements with America, because of the free trade agreements with Europe. That's just an example. But I think what we will see in the next year or two, a lot of arbitrage of tariff, where people are going to move to jurisdictions where the tariff have less impacts on them. And we saw it's already happening. I think we'll keep on seeing it for the next few months. And that's very interesting because that's developed some countries that are going to be a lot more stronger in aviation. And as a global industry, it's amazing for us to see some countries getting into the OEM manufacturing, the supply chain, which is changing, I think, most of the countries' technology and most of the countries' education to move into more aviation. I saw it in my country of Morocco, where aviation is becoming predominant. We saw last week Safran setting up a huge factory in Casablanca. So we're extremely happy to see that coming to our country of Morocco, and we're very happy to see that worldwide as well.
Okay. The OEM supply issue, and I suppose maybe a sense here in New York this week that it's starting to ease, that perhaps the OEMs have turned the corner. How do you think of that in ABL Aviation? And how do you think what does it mean for deliveries? What does it mean for the midlife market?
So let's speak about OEM deliveries and then we speak about midlife. Let's say, for example, today as ABL, if I want to make an order, my delivery will be 2031, 2032. So it will be about 7 years from now. it would be very hard for me today to make an order knowing where the market will be 7 years from now. Nobody knows. Like, well, I wish I knew, but I think it would be extremely hard for everybody to know where the market will be 7 years from now. So even if you make an order today, you're going to have a hard time having a vision of what will be the equity return, what will be the placements at that time, where you place it. So in 7 years from now, the markets can be totally different. That's on the OEM part. On your second question about the midlife, the demand is very strong because of the OEM not able to produce fast enough, and because, of course, of regulation of FAI and the EASA limiting the production as well of those OEMs. We see the engine issues as well. That is very important for us on our side, that you cannot take an aircraft, of course, without an engine. If you take an aircraft, you need to have the engines with it. So it's not only the issue with the supply of Boeing, Airbus, Embraer, it's also the engine manufacturer that you need to negotiate with, fix the delivery time, and then you can get the aircraft. So on our side, on the new deliveries, we see a lot of delay. They are getting shorter and shorter, but it's still, we cannot book when do we get the delivery time and when we use that money, because the airline themselves don't know when they will get the aircraft. So that's a very complicated situation we're in. The delivery timing is getting shorter for pre-ordered aircraft. I'm not speaking about the future ones, but for pre-ordered aircraft, but there's still some lack of knowledge, which when you are blocking some capacity for an airline, it's very hard for you to say, okay, it should be for the months of November, December, it's going to switch by 3 months, 4 months. And for us to block equity capacity is very complicated for us.
Okay. And you touched on the engines there a moment ago. I'd be fascinated in your insight on what that means for fleet selection. So around new technology, engines, how do you guys in ABL think of those? And are you seeing those issues starting to be resolved as the technology beds in, or are you seeing new challenges emerge around engines?
We're extremely lucky because we do very long leases. So most of our leases are more than 7 years. So that's something that's very good for us because it gives us enough time to fix any issues that we have in our fleet. Also, we need to have partners in airlines. If an airline is not flying, they are getting less income. That means that the credits may get lower, and that means that they will have issues on the payment of the lease. So we watch carefully what is the fleet they have, what type of engines they have, and is there any issue on that engine side. You know, without few OEMs have big issue on the engine side, even with the compensation. An airline is not, the business of an airline is not to get compensated for failure of engine. The business of an airline is to fly passengers and make money out of that. So that, I think, I hope will be fixed very soon. We work very closely with airlines to see what engine issues they have, to see with OEM, when we are getting new aircraft being delivered, how can it be improved? But it's still a very big issue for our investors, and they have that lack of vision or the lack of transparency, that they don't know when it will be fixed, at what time it will be fixed, and how long is the issue going to be. Even if there's compensation, for the investors, that gives some uncertainty that they're not comfortable with.
And just to close out on the engines, the maintenance piece on engines and that maintenance cost may be unpredictable. How do you guys think about that?
Well, our technical team, so as you know, ABL, we're one of the only companies that don't use outside consultants. We do all the technical in-house, and I'm very strong about that. So my technical team, that is my team, not consultants, watch that very carefully. So when we do a fly forward to see when is going to be the next shop, we follow that very closely, and what will be the cost of it, because of course it will have a direct impact on the equity returns that we are getting to the investors. And that's one of the most, the highest components is the maintenance part, especially when you move to the midlife, to the end of life. The technical part is one of the most important return on equity that you need to watch very closely. So we watch it on a monthly basis. We update our fly forwards and technical views on a monthly basis for each one of our aircraft, so that we can stay as close as possible to the airline to know when there will be an issue, and then of course it will impact our equity return. So that's something that needs to be watched very closely. Some people outsource it. I'm not of that view. I like to have it in-house, but everybody manages it differently. Okay.
If you touched on it earlier, the lease rate factors, and they've made a significant recovery in the last number of years. I'm interested in your perspective on, are lease rate factors maybe now reaching a steady state? Is there further room for growth in 2026? And maybe your sense across the different either age of aircraft or type of aircraft around how that might develop.
So let's speak about the new assets. If you look at the new assets for tier 1 airline versus the new assets for tier 2 airline, the difference of lease rental factor is maybe 5 to 10 bips. That's my personal view. That risk that I'm going to take for that extra 10 bips is not worth it. I prefer to lower my lease rental factor by 10 bips and do a tier 1 airline, which I'm sure I'm not going to have I'm speaking about new assets, which I'm sure I'm not going to have a default, which I'm sure like that 10 bips times 12, it's not worth it for people like us. So we don't go for that. We prefer to go a little bit lower, and thank God we have, of course, Japanese partners that allows us to be competitive on that kind of equity return. But that 10 bips to go lower in the tiers for tier 1 to tier 2 to tier 3 doesn't justify the cost. Then if you move to the midlife, what we saw happen in the midlife in the last year and a half, because of the shortage of supply and because of the extensions, the midlife lease rental factor became a lot higher, and the purchase price or the value of the aircrafts didn't catch up as fast as the lease rental factor. So the lease rental factors went much faster than the purchase prices go in the last 2 years.
Okay.
On the midlife, of course.
ABL are a very experienced trader of aircraft, right? And you're very active in that space and bought and sold aircraft over the years. Your perspective on the current aircraft trading environment, is it competitive? How do you look at value? And who are the competitors for those aircraft in the market?
So, as you know, you have more and more consolidation. With consolidation means that you have too much concentration on specific names. With too much concentration means that you need to sell. That's the first reasons to trade. So a lot of people that have too much concentration will have to trade. And they will have to trade more and more volumes. So we see a lot of volume coming into the market because of the need of trading to show that they can have less concentration on certain name. That's the first type of sellers. And those sellers are usually people that's bought other platforms and they need to get that capacity out into the market. The second type of sellers are people that used outside money. We are very lucky at ABL is like we don't have outside investors in the company. We are 100% private. We are owned 100% by ourselves. We don't have that kind of pushing to prove that we can deliver, which is amazing to have. It's a very good position to be in. I'm extremely lucky to have that. You have some platforms that need to prove to their investors that they can deploy that money and they get forced to trade aircraft when they shouldn't be trading aircraft. That's the second type of traders. Then you have the third one is the ones that need to refinance the debt facilities. And to refinance the debt facilities, one of the only ways they have is to trade aircraft, and that will give them enough cash to refinance the debt facility. Those are really the three kind of traders you see in the markets. Where is the economics in today's markets? Some people have to deploy money because they need to pay for a platform, etc. And they will, in my view, overpay for some of the aircraft. It's a choice. You have different type of platforms. We are fully independent. We never get pushed into doing a deal that we don't need to do because we don't need money for the platform. Some people need money for the platform and they will do the deal just to get some cash for the platform. So that's really two different visions. So some people will overpay just to prove that they are able to acquire aircraft. And some people will be, like us, very steady and waiting for the good transaction to be done.
Get your perspective on the investor environment. And you're obviously exceptionally experienced in the Japanese market. So one, are new investors coming into aviation? Where are they coming from? And maybe a second part to that question, your sense on the Japanese environment, investor environment and where it's at today.
So let's get the Japanese out and then we speak about the other parts. On the Japanese side, which we became this year number one, I believe. That's what we hear from the Japanese markets. There's no public figure, but we became number one. You have to understand, in Japan, you really have like 5 players. You don't have lots of players in Japan. It's really 5 players that dominate the market. One of us is us with our partners in Japan. So if you have good products and if you protected the investors during COVID, those investors will keep on investing with you. We protected all our investors during COVID. We never lost money for any of our investors during COVID. So they fully trust us for investing with us. So that's the Japanese market. But at the same time, the Japanese market, as you know, it's first a long-term partnership. So you have to be there up and down. You have to be coming, showing up and delivering for your Japanese investor and being very present. The second thing, the Japanese markets, people think that is that big, but how many names can you do in Japan? You can do maybe 20 names. It's the tier 1 names. You cannot go, maybe we have 1 or 2 new names that come every year, but it's really 20 names. So the Japanese market is not that big. It's a small market that you can only do about 20 names of airlines. So that's on the Japanese market. Then on the second question about new investors. We're raising a fund right now. Our Japanese partners are co-investors with us in the fund. We see a lot of appetite for Middle East. Saudi Arabia, we see lots of appetite in there. Qatar, we see lots of appetite. Abu Dhabi, we see lots of appetite. So there's more and more appetite for Middle East. And it have to be usually Sharia compliant structures. And you see a lot of appetite coming from Middle East for equity returns less than what's usually the US PE firm. So it's not about raising money, it's about your cost of money. Everybody can get cash. Everybody has cash in today's industry. It's not about having cash, it's about your cost of cash. So if you are raising money from a private equity in the US that sees high double-digit return, in my personal view, it should be limits impossible for you to deploy that capital. If you are below the double digits, so high single digits, that's feasible. But the moment you get to the middle to high double-digit returns, I don't think our industry is made for that.
Okay.
On on a big scale. You can do it on 1 or 2 deals, but to do it on a big scale, I think it will be a lot harder.
I'm sure as you're speaking to those investors, comparison with other asset classes come up and how it compares and how aviation compares. Be interested in your perspective on that. How's aviation holding up in the current environment as an asset class to invest in?
That's a very good question. So let's start with, you spoke about Japan and then we move to the other parts of the world. In Japan, you are competing with shipping, okay? And the difference of your equity return between aviation and shipping is about 200 to 300 bips. Okay, so when you show an investor a transaction in aviation, and then someone else show them, and you show them after that a transaction in maritime, and it's usually very good names in maritime, then the investor goes, why do I have 300 bips lower in aviation than shipping for tier 1 names? Let's say, for example, Hapag-Lloyd with the Lufthansa or something like that. Then that's, I think, is what is the most competition we have today, is the allocation of capital between shipping and aviation in Japan. That's a big issue. Like, we're not competing with other houses, we're really competing against the shipping market, if we're speaking about Japan. Then if you see globally, a lot of people in Midlife, for example, we compare a hard asset to hard assets. I know it's a fixed income asset, but they will compare it to, for example, real estate. So, okay, I get double digits in real estate, but they forget that they didn't count for the cost of land, for example, in some cases. So then you have to compare asset to hard assets. We are in a hard assets business. It can be aircrafts, it can be real estate, it can be shipping. It's a fixed income. So for them, it's how much fixed income you are getting, how much coupon you are getting, which is very important. That's what most investors are looking for.
Okay. If I kind of pivot back to something you touched on earlier, the M&A that's occurred in this space in the last while, and there's been 1 or 2, sometimes 3 big transactions every year. We've had the ALC SMBC transaction announced recently. Nordic DAE announced it closed earlier in the year. Do you think there'll be further consolidation in this sector and in the bigger space?
Yes, because either it's a public listed company or it's companies that have shareholders that want them to go, and that's the target. And the only way you can go that fast is by acquisition. Is this good? Yes, because I think you are going to have 5 to 6, if you take the top 30, right now, if we look at the Syrian, we're about 25, 24 in the big 30. So if you take at the top 30, you're going to have 5 or 6 very large lessors. And those very large lessors, which we see today, it's about, I think, 20 billion, whatever, it's 20, 25 billion for the top 3. Those big lessors are going to have first big concentration with few airlines. So if I'm an airline and I have a big concentration with one of the big lessors, I said, okay, I want to have less exposure to that lessor. So the lessor is going to be in a disadvantage because they will go to other people, even if the equity IRR is a little bit higher or the lease rental factor is a little bit higher, because they cannot have all the eggs in one basket. So they will say, okay, we have enough with this big lessor, we need to divide. That will force those big lessors to go down the chain. That's the choice that they will make. That's the first point. The second point, in my view, those big lessors are going to become less nimble. And by being less nimble, by having too many airlines, they will have a hard time offering airlines all the solutions that they need. They will be able to offer, of course, cost that is cheaper, but it's like it will become like a commoditized paper that they're giving to the airline. That's a different solution about our industry. Our industry is about close relationship with airlines, nimble solutions, being next to the airline and finding what is the solution that they need. That's what our business is about. For some, it's a cheap cost of capital, that's fine, but for most of the airlines, it's having, in my view, almost a full solution of new, midlife, end of life, and even maybe ground support equipment, engines, and one package that we give as one solution to a finance or treasury team. I think that would be the dream of most of the CFOs, is yes, if the cost is a little bit more expensive, but we have one package for everything, that's where our industry will go. So you have the 5 to 6 big lessors, then you have the guys between 10 to 20, which I think we're going to be there soon, which are going to be more nimble, which are going to offer better solutions to airlines. And then you're going to have everybody else that either will be very specialized, so it will be either people that are doing only freighters, people that are doing end of life. They will have very unique strategies. That's the only way they can survive in these markets, or they will be consolidated with someone else.
And do you think these consolidations could throw off assets that are interesting for ABL? So as businesses combine, they may want to remove concentration risks, they may want to release capital, liquidity to pay for forward order aircraft. Do you think that creates opportunities for ABL?
Of course, it creates amazing opportunities. Why? We are a fully independent company. We don't have shareholders, so we can do when Midlife made sense for us, we did Midlife. When New made sense for us, we went and did a joint venture in Japan. Now Midlife makes sense for us. We are not being pushed to do any deals. So we don't have shareholders that gives us a box that say you have to do 0 to 5, you have to do minimum 5-year lease and this amount of equity IRR. Because when you have that pressure, you can only do that. And if the market changes, you're stuck in that box. We can go from 0 to 25 years with no problem, and we can choose where to be, and that allows us to protect our investors. If the deals don't make sense, we can tell our investors, look, it doesn't make sense now. We don't need money for the platform. Please wait, we're going to do something else, and then we come back to this market. And that's the uniqueness of ABL today, is like we can do that 0 to 25 years, and that allows us not to be pushed into one box where we are forced to do deals we don't want to do.
Okay. Can I ask, we've spoken about the M&A channel, we've spoken about your investor channels. I'd be interested in your perspective on the purchase and leaseback or sale and leaseback market.
Yeah.
Are you participating in SLB campaigns?
We're very active.
And how competitive is it?
So new, let's divide it again. I like to divide my markets in my head, is clear. New, midlife, end of life. New, it's Japan. New tier 1 and tier 1.5. It's Japan. Nobody can compete with that. Yeah. It's, on the new side, it's going to be Japan markets. If it's good names, they are going to go after it. So whoever the 5-6 players in Japan are going to go after the new narrow body market. Maybe wide bodies, some non-Japanese money can get in. Midlife, some of the players are ABS players, some of the players are Middle Eastern, some of the players are some private equity on the midlife markets. And then end of life, you have people that have MAOs that can do disassembly, that can get to double digits, high double digit returns. That's how you divide this on the investor, divided by age of assets.
Ali, we try to pull all this together. So, you've spoken about the asset, the liability side of the balance sheet, demand. I'd be interested in your perspective and a stand-back perspective on where is the industry going in 2026? But let's take it out even further. Where is it going up to 2031? Before we really get that recovery in supply.
So you don't have enough supply of aircraft, okay? So it's supply and demand market that gives you the price. So not enough supply, higher price on the lease rental factor. You are going to have a higher lease age factor on the midlife, at least for the next 4 or 5 years, where the cost of leasing is going to go higher because of the supply not being present enough. So for 2025, which we know, until 2030, 31, which you can have aircraft by then, I think all the midlife players, new it should be Japan, but let's speak about higher equity return. All the midlife players are going to make very successful return on investments on midlife because airlines are going to extend. Whatever aircraft is flying, all the airlines in capacity. So if you retrofit any aircraft, I flew yesterday on a US airline company where they retrofitted the 737-8, which was amazing with Bluetooth and all that. It was really impressive. On the 737-800, I think the aircraft was maybe 15, 20 years. I couldn't believe how amazingly retrofitted it was. So you cannot have enough supply, so you're going to lease midlife and retrofit them. So there will be a huge demand for midlife aircraft. So that means that the lease age factor is going to go higher. And the lease age factor is, as I said earlier, the lease age factor is going to go higher than the purchase price is going to go higher. So the purchase price is going to increase slowly and the lease age factor is going to go a lot faster. Extensions, you are going to have a lot of extensions. So extensions are going to happen more and more. So that's from 2025 to 2031 is the midlife markets. You still have the new side, which I think most of it for the good airlines is going to go to Japan. Then 2031 and further, I think the market is going to be into the end of life because by the time Boeing, Airbus, Embraer is catching up on the supply chain, you are going to have a lot of aircraft coming out. And all those aircraft need to get dismantled. We'll need to have a lot of engines, landing gear, APUs. So I think having an MRO facility that can disassemble after 2030 is the future. So you do, before COVID it was new, between 2025 to 2031, it will be midlife markets. Everybody is in midlife is going to be very successful. And 2030 and further, in my personal view, it should be anyone else can dismantle and be able to sell or lease the engines, be able to sell or lease the APUs. That's where the future will be. But airlines, one thing that airlines are looking for right now is a package solution. They don't want to deal with different prices. You need to be able to come to an airline and make their life easy. That's our job as lessors, as asset managers, is the client is the airline. We need to make sure that the airline is happy with the solution. They have an all-day cap that we can take out, a new one we can put in. They need an engine we can place. That's what airlines are looking for.
Actually, it's a really interesting point. What's a typical package look like for an airline like that? So what's different in those packages that ABL can offer?
So we started last year, doing ground support equipment, for example. We did Swissports about, I think if I'm not mistaken, about $270 million facility for Swissports. And that's facility, I was telling my team, it would be good to offer to airlines that facility. Because if we can offer that package of, I give you the ground support equipment with the engine, the aircraft, and the end of life, and whatever you don't want, I can take away from you. That's heaven for the airline. Even if you're a little bit more expensive, and you have one set of documentation, you make their life easy. It's all about making the life of the airline easy. The job of an airline is to fly people, to be on time, and to have enough metal to move those people. The job of an airline is not to deal with the residual value of an asset. The job of an airline is not to take risks on what will be the financing costs of the ground support equipment of the engines. For their job is to fly airlines. Our job is to make their life as easy as possible, that we can give them a full package where they don't have to deal with that nonsense and headache of combining too many offers.
And can I ask you maybe a final question? As a CEO, the risks that you focus on most and how you mitigate those across that period again. So if you kind of think out, not just 2026, but out 2026, out to 2031 and beyond, what are the risk mitigation strategies you're deploying?
For the company?
Yeah, for the company and for your investors.
Well, the company is one of two parts that I don't like doing in my company is HR and accounting. Those are the two things that I really... I know as an accountant, I'm sure you must be hating it. Okay. We use KPMG, funny enough, so we use you guys.
To us,
we give it to you guys. But those are the two, and usually I do them on Friday because like I know that I'm going on weekend just after that. But those are the two parts of the. I know I'm doing it tomorrow, but those are the parts that are the most complicated as a CEO in a company. The part that I love is investing, doing deals, case in transaction, case in value for investors. I love doing that every day. That's why I fly almost every day to Kate does. The parts I don't like and to mitigate the risk is the HR parts, because as you know, the market is very moving, and lots of people are moving with consolidation, M&A. People are moving from one company to one company. So that part is a little bit painful when people move in and out. But you know, we manage it. It's not an issue. And the second part, of course, is to make sure that the platform is always fully independent, that we don't need outside capital, and that the platform is surviving by itself. That's my two main points that I focus on every Friday.
Okay, well, on those two principles, Ali, thank you for your time. I think they're fantastic insights. Congratulations on 20 years in business. And look forward maybe to talking to you again next year.
Would love that.
Thank you very much.
Thank you so much.